News to get out there on something not related, at least to the White House directly, and that is the Federal Reserve. According to the New York Times, the Washington Post, the Wall Street Journal, looks like this was coming off an embargo right at 5 p.m. has just announced that they're further lowering their interest rates in the 0 to 0.25 range, essentially bringing interest rates all the way down to zero. That is a remarkable emergency move by the Federal Reserve. It gives you an indication of how concerned they are about what's happening in the economy. And there's also some assets purchase in there, which not to wonk out too much, but is known as quantitative easing. I think the Times put it at 50 to 200, 500 to 200 billion. Excuse me here, and all the excitement, I realize I've taken off my microphone, so I'm going to just slide it up here. But the news is, according to other news organizations, the Journal, the Post, the New York Times, the Fed has acted, and they have acted in a way that is quite dramatic, lowering interest rates almost down to zero. It was just yesterday that I asked the president whether or not he thought he had the authority to fire Jay Powell, the chair, and the president said he had the authority. He wasn't making a decision. So we'll get into the details of what this Fed decision means and the specifics on asset purchases. But I think overall, it is an indication that people at the Federal Reserve are very concerned about the state of the economy and what coronavirus can do to not just the United States economy, but a global slowdown. Richard?
Yeah, and Hans, with that bit of news that is being reported on from other news agencies, as we understand these Fed cut rates are so essential to give confidence to the markets, and as you were describing, effectively free money for folks that need to borrow it, if not being paid for money when you look at inflation itself. And so with this $500 billion or $500 billion in treasuries and $200 billion in mortgage-backed securities, as the Fed says, they're concerned about economic disruptions from the coronavirus. One of the questions that's been asked, Hans, how much is needed, right? Because the black box is a black box.
Yeah, and the answer is they don't know because a lot of the data on this is lagging. And one of the criticisms, not just from the president, but even from Democratic economists, from conservative left-leaning economists, was that the Fed raised interest rates a little bit too quickly over the last 18 to 24 months. They always want to be one step ahead, but it's very difficult to get it right. And so it does look like they're going with overwhelming force on this. Now, there have been cases where central banks have got it right, and it's basically by using a bazooka. You saw that with Mario Draghi and the ECB and the Greek debt crisis, doing whatever it would take. This is a strong signal from the Federal Reserve that they are going to continue to be involved in this, and they want to send a message to markets that, A, there will be liquidity, which is what MBS and buying treasuries does, and B, that it'll be very cheap to borrow money and that banks should try to lend money to consumers to get the economy going again. But the latest number we had was from, 10 days ago now, 8 days ago, that Friday jobs number for the month of March, which showed the print of something like 273,000 in non-farm payrolls. That is a remarkable number. So the economy fundamentally was very strong heading into this, say, towards the end of February. There's a great unknown on what the economy looks like now. And all kinds of data comes in anecdotally. They're obviously in touch with industry. The Fed is seeing how the gears of finance are working, and they may be seeing something that's concerning them and taking this emergency action. Trading's going to open up here in a couple hours in Asia. I believe it's about 6 a.m. In Tokyo. Markets will start opening up there, and we'll see which way they go. And I've been through too many of these with market-moving events from a central bank to not hazard a prediction. They could like it or they could be worried about it, and as they say, it could go up or down. Richard?
Hey there, I'm Chris Hayes from MSNBC. Thanks for watching MSNBC on YouTube. If you want to keep up to date with the videos we're putting out, you can click subscribe just below me or click over on this list to see lots of other great videos.